Welcome to Capital Currents, where the flow of business news and market trends keep you ahead of the tide. I'm your watchdog, and today is Wednesday, August 14th. We have a lot to cover today, but a quick update on yesterday's news. I mentioned Starboard Investor Group took a stake in Starbucks to help turn the company around. Looks like their first order of business was ousting Starbucks' current CEO and naming the Chipotle CEO as their replacement. Investors are going nuts with this news. Starbucks ended the day up 27%, its highest single-day jump ever. But on the flip side, Chipotle stock is down about 10%. Today on the docket, Johnson & Johnson makes progress on its litigation case, Pear's 2024 viewership numbers were a smashing success, and CX App and Google partnered together. Johnson & Johnson has reportedly made headway in its long-running battle to settle thousands of lawsuits filed over the safety of its talc-based baby powder. According to a Bloomberg report, over 75% of the people who filed a lawsuit agreed for a settlement. That settlement would pay $6.5 billion over 25 years to resolve the claims that the product has caused ovarian cancer. Bloomberg also said the company has cautioned it may face thousands more claims in the future. Not much movement on the stock with this news today. The ratings for the Paris 2024 Olympics were up 82% compared to the Tokyo Games in 2021. Over 30 million people on average tuned in every single day on Comcast media outlets. That includes channels like NBC, USA, but most importantly, Peacock. Personally, I had Peacock Gold Zone hosted by Scott Hansen running every single day for the last 2 weeks. The Olympics really were S-tier background noise, and now I'm kind of going through some withdrawals here. The big question for Comcast and Comcast investors will be if people that subscribe to Peacock will stick around. We'll get that answer in late October in Comcast's next earnings call. The experience platform CX App enters into a multi-year, multi-million-dollar deal agreement with Google Cloud. This agreement entails the development and delivery of advanced AI infrastructure, security, and application products. Google Cloud will also invest in the CX App in the continuous deployment, monitoring, and modernization of the platform. Given the momentum they're seeing in the market, the company's chairman and CEO said this deal will help them deliver their commitments to their customers. CX App is up 63% in the pre-market. There's a few events to keep an eye out on for the rest of the week. Google will hold its annual Pixel hardware event at the company's headquarters in Mountain View. The company is expected to show off the Pixel 9 and a Pixel 9 Pro Fold. And Supermicro began its Open Storage Summit, which is a 3-week-long summit that includes a roundtable session and focus sessions with executives from companies such as Intel, AMD, Nvidia, Micron, and Samsung. The biggest news from that event so far was semiconductors could start recovering in late October. I will follow that summit and report back any other news. That's all the business headlines I have for you today. Let's take a look at some stocks making moves. Home Depot reported mixed Q2 results and set full-year guidance below expectations. Same-store sales decreased 3.6% and customer transactions were down 1.8%, but plans to open around 12 new stores. Home Depot is blaming the decline in sales to high interest rates, which means that less people are buying houses or borrowing money to redo that kitchen. Maybe this information was already priced in because there's not a lot of movement on the stock today. Shares of HelloFresh are jumping this morning. Most people know HelloFresh as the meal prep kit company, but investors are loving the pivot to ready-to-eat meals. This ready-to-eat meal delivery industry grew by 50% year over year, and HelloFresh stock is up more than 10% in reaction to this news. The stock is still down more than 50% for the year though, and down more than 90% from all-time highs back in 2021. But it is a step in the right direction. Shares of Hawaiian Holdings, the company who owns Hawaiian Airlines, fell due to investor concerns about a potential Justice Department lawsuit blocking its planned sale to Alaskan Airlines. A justice trial attorney who was involved in the DOJ's lawsuit to block JetBlue from buying Spirit Airlines also filed to block this deal from happening. Airlines just cannot catch a break these days. Lastly, shares of the Swiss athletic apparel company On Holdings are down after delivering a mixed earnings report. The Roger Federer-backed company is primarily known for its running sneakers, and they're competing pretty well against Nike. Revenue topped estimates, but earnings fell short of expectations. Sales were up nearly 28%, and management still expects at least 30% net sales growth for the rest of the year. With outlook and sales up, it's a little bit of a mystery why the market had a negative reaction. Anyway, that's all for today's show. Keep navigating those waters, and see you tomorrow.